afternoon, everybody. Welcome to our Moving Markets podcast. Today is April the 12th, 2024. Stock market has been closed for about 40 minutes at the time that we are recording this. Glad to have you here on a Friday, and I'm going to say it right now in case I forget at the end of the podcast. Hope you have a fantastic weekend as we head into the weekend. This is not going to be a really long podcast simply because there's not much that needs to be updated with our open trades. I will comment really quickly for the Safe Option Strategy members. I know the AMD trade doesn't look phenomenal. We made an adjustment on it earlier this week. It's down a little bit from where it was yesterday because it had a nice rally to the upside yesterday, but it's actually doing kind of sort of what we need it to do. The reason I say, the kind of sort of, AMD, because we rolled out and are in a basically horizontal calendar trade right now. We've got the 170 options both in next week's expiration and the following week's expiration. I think it is still possible that AMD gets a little bit of a bounce up from here, but we lost enough value in the 170 option that expires next week, and you'll see that extrinsic value bleed off even faster when we get past the weekend. When we get into the actual week of expiration, it'll bleed off really quickly. And ideally, we don't want it to move back up to 170 too quickly. It'd be nice if we got to Tuesday, Wednesday, maybe even Thursday of next week before we saw a move up so that we could either buy to close the April 19th 170 call and do so at a small profit just relative to the credit we took in on it, and then allow the 170 that's in the 170 call that's in the April 26th expiration to move up farther. So if there is a bounce coming in a turnaround, and I suspect there could be, we'd like that to not happen until maybe the middle of next week. So I'm actually, even though the current value of the trade lost a little bit today, I'm not displeased with where we are. Conversely, we gained a little bit on Walmart. We look a little bit better on Walmart than we did today. Only gave up a little bit on Amazon, but we went profitable on DIA, and I can't figure out. I don't know. With as far as the market sold off today, it makes no sense to me at all that SPY ended up a fraction negative. That'll reverse so quickly on Monday unless there's a big rebound. So I'm not too worried about that one. It's down a fraction. Palantir is another story. We will address that next week. They're still a couple weeks away from their earnings, but early next week we'll address that. And our collar trades are exactly set where they need to go. There's nothing we need to do currently with collar trades. So that's as much commentary as I have for the actual open trade. So let me shift a little bit and talk about what I see going on in the market. I mean, it's obvious what happened today. I don't need to recap what happened. The Dow sold off 475, S&P 75, NASDAQ 267. Those are all between 1.25% and 1 2/3%. It was just an ugly day on the market. And here's what really was the catalyst to everything. This morning you had two companies that collectively control a massive, and we're talking massive amounts of money. JP Morgan Chase, one of the largest financial institutions in the world, and BlackRock, which I believe has the largest dollar amount of holdings for a trading company, for a company that trades other people's money. I believe they have the largest assets under management of any company. So combined, these companies control a lot of money. They both had really similar situations take place today. This morning before the market opened in their earnings reports, both companies reported good numbers. The quarter over quarter growth, the year over year growth, the top and bottom line. There weren't any big holes in either one of them. You can dissect and dig in a little bit deeper. I believe JP Morgan was a little bit concerned about the percentage of interest they have to pay out to investors. A little bit of concern with that, and they talked about that. There's little things that you can dig into when you get into those numbers that might not be as rosy as just that simple top and bottom line. How much profit did they make? How much revenue did they bring in? But both of them had good numbers there. And then both CEOs of the respective companies said initially, they said it in different ways, but they initially talked about the same thing. Now, a little bit of a difference, and I'll tell you the little bit of nuance difference. Both of them expressed concern about the economy the rest of this year. Jamie Dimon was a little more direct, and he does not believe the Fed should cut interest rates this year, and Jamie Dimon is even saying publicly that he would not be surprised or thinks maybe a rate increase could happen before the end of this year. He thinks it's way premature for the Fed to be talking about cutting rates. He's looking at the inflation situation and saying it's not where it needs to be, and he's expressing the concern for it. The BlackRock CEO, Larry Fink, I think is his name, he essentially said the same thing, but he's a little more in the camp of the current political administration, because he's saying, 2 times this year instead of 3 times, but they're going to miss their 2% inflation goal. It's essentially the same narrative. They might be off a little bit on their predictions, but they're essentially talking about the same narrative. Things are not going as good as what the administration is trying to spin it as, and that's to me. That's now. Look, I know I get political at times. That's what I take out of it. There's different ways to describe it. There's different ways to look at it. And if you pressed either one of them, they might say, no, I'm not trying to be political. But they're both pointing out what most of the rest of America actually sees, and that is that the White House and the current administration are gaslighting us every time they say things are better than what people are feeling. When they try and say things are going great in the economy, people just aren't recognizing it. Well, people aren't recognizing it because it's not happening. Yes, inflation is not as bad as it was a year and a half ago, or almost 2 years ago now. That's accurate. That's correct. But prices are still going up, and it's still outpacing wage growth, and it's outpacing job growth, and it's outpacing people's ability to keep up and afford it. So it's not a better picture. It is a less bad picture. Now, you can have the whole conversation about, glass half full, glass half empty. I've had a couple of friends of mine that don't think quite as passionately about this as I do, that kind of make that argument. Okay, fair point. It is better that we're only going up between 3 and 4% instead of going up 9.5%. I will be the first to admit that's better. But some of you remember a couple of weeks back, maybe 3 or 4 weeks ago, I gave an analogy, and I wish everybody could see it this way. I think a lot of people can. I think most people see it this way. And again, it's just the administration that is trying so hard to gaslight us on things. If you're moving, if you left your wallet at home and you're in a car with some friends that is going away from home, and you need to get back home to get your wallet, and a year and a half, 2 years ago, if that 9.5% was relative to traveling 95 miles an hour away from your house, that's really bad. The distance you're putting between you and where you want to be is accelerating, and it's out of control, and it's going way too fast. If you bring the speed of the car down to 35 miles an hour, but you're still moving in the wrong direction, is it better than accelerating away at 95 miles an hour? Of course it is. Are you still getting farther away from where your wallet is back home? Yes, you are. And that's what Americans are feeling right now. That's what people are feeling at the grocery store, at the gas pump, with mortgage rates, with insurance. That's what people are feeling. And no amount of gaslighting from the White House is turning the tide on that right now. So I think the reason I got off on that commentary, because of what JP Morgan, because of what Jamie Dimon said and what Larry Fink said, is I think this week in the stock market, you're starting to see the realization of what some of us have suspected and known for 6 months to a year. You're starting to see the rest of the market get it. There are finally enough signs that things are not as rosy as one would have us believe. And that's why you're getting this type of a tail off. This is almost a 5% drop. I would personally, I would like to see another 5% on a less steep curve. I don't want it to be in a 2-week period of time. I would like to see 5% more spread out over about 6 or 7 or 8 weeks, because I believe that would be a very healthy correction. That may happen, it may not. I don't think what happened with JP Morgan and with BlackRock this morning is automatically indicative of what the rest of the big financial companies are going to tell us when they report on Monday and Tuesday. I think you've got Goldman Sachs, you've got Morgan Stanley, you've got Bank of America, you've got Wells Fargo. I'm trying to remember. I'm not remembering off the top of my head which date is which on all of those, but I believe the other really big players in the financial arena are reporting mostly in the beginning part of next week. Monday and Tuesday, I think, are going to be really big days. Today it was JP Morgan. Oh, Wells Fargo and Citigroup did report today. I couldn't remember if they did or not, but those were the other two big banks that reported today. When we get to Monday morning, you've got Goldman Sachs, you've got Schwab, you've got some more regional banks. You get to Monday afternoon, FB Financial Corporation, again, some other maybe more regional type banks. And then Bank of America comes in, Bank of America and Morgan Stanley on Tuesday morning before the market opens. If those companies, if gold, and specifically, I'm going to focus in on 3 or 4 of them. If Bank of America, Morgan Stanley, and Goldman Sachs, if they are all showing us a look that is similar, doesn't have to be exactly the same, but if it's similar to what JP Morgan and specifically BlackRock did this morning, if on those conference calls you hear some concern expressed about the sticky inflation and interest rates not coming down, or having to, pay borrowers or pay people that have money in savings and stuff too much interest on what they have, and if you hear kind of a similar story, we are going to, at least until the biggest tech companies report a week and a half later, you're going to see some continued sell-off. There's going to be some continued pain. I think that's why I'm pretty happy about the DIA trade we have right now, the SPY trade we have right now. And I guarantee you, when we put out a new trade on Monday, 1 or 2 new trades maybe, we're going to do something that's non-directional. We're going to stay very non-directional as we get through this earnings. We've gone through the last 3 or 4 quarters in a row of earnings season, and I've watched a lot of companies kind of defy what I feel like is the economic situation on the ground. I see what's happening in the grocery store, at the gas pump, with insurance rates, with all this different stuff, and I know for a fact that politically we're being gaslit by the current administration. I mean, to me, it's an obvious thing. It is an obvious thing to a lot of other people as well. But unfortunately, there are some people that haven't been buying it. And then the bar gets set so low for these companies, all of them. And it's not necessarily their fault. The analysts are setting the bar so low that these companies keep coming in, crushing the numbers, or at least beating them dramatically. And they've been a little bit reticent, I think, to speak truthfully about outlook and guidance. I think they're holding back a little bit. Today, it did not feel like Jamie Dimon and Larry Fink were holding back as much. They weren't necessarily trying to be super negative. They just weren't holding back as much. And that's what the sell-off was. I think that was the catalyst to the sell-off today. You couple that with the CPI report on Wednesday and the PPI report yesterday that I'm still not buying. I think that report was a sham. But you couple that with what happened this morning, and that's why you got this big sell-off. Like I said, personally, I'd like to see about another 5%, maybe a little more than another 5% continued pullback. We're almost in technical pullback correction, which is 5% from the recent high. And I think when I looked at this is actually like 4.5 or 4.6% from the recent high. Another 5.5%, so that it was a full 10% pullback, I would be ecstatic with. But like I said, love to see it happen over 4 or 5 or 6 weeks and maybe take us to the end of May. We'll see if that happens or not. I hope this isn't too much of a downer. I think our positions are good, both in collar trades and in spread trades. I'm still extremely pleased. Even though we've given up a little bit, I'm extremely pleased with where we're at. We are with this recent sell-off in the Dow and the Nasdaq and the S&P. We are crushing, absolutely crushing the index averages so far this year, and I expect that to continue. I expect the diamond trade, the SPY trade to get profitable. We may talk on Monday or Tuesday morning about getting out of Amazon with whatever profit we have before their earnings. But like I told you yesterday, I'm staying with Walmart because I think they're a company that could actually profit a little bit if the rest of the market is selling off. They did a little tiny bit of that today. They managed to stay in the green today, and I think they were the only company. They might have been the only company on my watch list or my active trades that actually stayed in the green just a little bit today. ExxonMobil might have been the other one. I think Exxon was up a little bit today, but that's where. Let's see. No, even Exxon was down today. None of my collar trades stayed in the green, and Walmart is the only one of my spread trades or anything on my watch list that actually stayed a fraction in the green today. I think you'll see a continuation of that. So, all right, have a great weekend. Whatever you're doing, I hope you're enjoying it. I hope you're relaxing a little bit this weekend. And we'll be back on Monday. Thanks, everyone.